Ethereum in the 2000s is cheap. I think Solana in the 100s is cheap. And I think Bitcoin under 100K is cheap. I think $250,000 to $500,000 Bitcoin makes complete sense. And I think that $10,000 Ethereum makes complete sense. And I think that, $500 Solana makes complete sense. And I don't think those are that aggressive as targets.
Welcome to Bankless, where we explore the frontier of internet money and internet finance. And today we are exploring some charts, some technical analysis, some trading charts, and we're doing it with our friend Ledger. Ledger from LedgerCast, Ledger from Up Only. Ledger is a friend of the pod, certainly, and whenever I want to look at charts, I need some help because I'm not a chart person, so we bring on Ledger to help navigate some charts. I present Ledger with 4 charts to kick the conversations off: Bitcoin dominance, the ETH BTC ratio, the ETH Solana ratio, and then the Solana USD price. As we have all kind of passed through the market turmoil of the Japanese yen unwind debacle that kind of rippled throughout all the markets, I think this is an opportunity to kind of just check in and zoom out. I think these 4 charts that I'm presenting Ledger with kind of tell a story, and I want to hear his interpretations of them. And then he also takes over and starts to drive the charts as well, opening up the Dixie chart, the 10-year interest rate chart, as well as a few others. And just, Ledger's a wise man. He's seen a thing or two in the markets. And so just I always want to get his perspective as to where we are when we look at the charts and what this means for crypto as we move forward. So it's a pretty fun conversation. I hope you all enjoy it. Let's go ahead and get right to that conversation with Ledger. But first, a moment to talk about some of these fantastic sponsors that make the show possible, especially KRAKEN. If you have been compelled to make any moves as a result of this conversation, I ask you to do it on KRAKEN if you are entering or exiting crypto. Hopefully entering. And if you want to do that on KRAKEN, there's a link in the show notes to getting started with KRAKEN today. If you want a crypto trading experience backed by world-class security and award-winning support teams, then head over to KRAKEN, one of the longest-standing and most secure crypto platforms in the world. KRAKEN is on a journey to build a more accessible, inclusive, and fair financial system, making it simple and secure for everyone, everywhere, to trade crypto. KRAKEN's intuitive trading tools are designed to grow with you, empowering you to make your first or your 100th trade in just a few clicks. And there's an award-winning client support team available 24/7 to help you along the way, along with a whole range of educational guides, articles, and videos. With products and features like KRAKEN Pro and KRAKEN NFT Marketplace and a seamless app to bring it all together, it's really the perfect place to get your complete crypto experience. So check out the simple, secure, and powerful way for everyone to trade crypto, whether you're a complete beginner or a seasoned pro. Go to kraken.com/bankless to see what crypto can be. Not investment advice. Crypto trading involves risk of loss. Launching a token? Don't let complex legal and tax issues slow you down. TOKU provides specialized support to optimize your launch and ensure that you as a founder and your team and your investors get the most tax-efficient outcomes. The TOKU team understands the crypto space inside and out and will ensure your token launch is fully compliant while maximizing tax efficiency. TOKU can connect you with the best attorneys if you need them to make sure that you have the best advice, and TOKU can help to optimize your taxes so you pay the least possible amount of taxes while still maintaining legal compliance. With TOKU's guidance, you can concentrate on building your company while TOKU handles the logistics. Token launches don't have to be complicated. Talk to TOKU today to get a free initial token valuation. The UNISWAP extension is here. The self-custody wallet, created by the most trusted team in DeFi, UNISWAP Labs, designed to make swapping feel effortless. This extension lives in your browser's sidebar, letting you swap, sign transactions, and send or receive crypto without ever losing your place on the internet. Plus, with human-readable transaction messages, you'll always know exactly what you're signing. Navigate a multi-chain world effortlessly with support for 11 chains like Ethereum Mainnet, Base, Arbitrum, and Optimism. No more chain switching or token importing. All your assets are right where you need them to be. The UNISWAP extension is designed to level up your swapping experience with other Uniswap Labs products as well. Easily onboard to the extension using the Uniswap mobile wallet to begin managing your assets across platforms and take advantage of smooth, seamless synergies with the Uniswap web app. So go and download the Uniswap extension today by clicking the link in the show notes. Just another way Uniswap is helping you swap smarter. Bankless Nation, I'm here with the lovely Ledger. Ledger, how you doing today, my man?
I'm doing great. How are you?
Good. Good to see you, dude. We always bring you on when I want to look at charts, because anytime I look at a chart with just me and Ryan, I realize that it's just like, it's embarrassing and I shouldn't be doing that, at least with interpreting them. With the recent yen trade unwind that kind of just pummeled the markets, there's like an opportunity, I think, to kind of like zoom out and kind of do a checkpoint of like all of the crypto charts. So I'm sharing on the screen here 4 charts that I think are kind of emblematic of maybe perhaps the current state of crypto. We got the Bitcoin dominance chart, which has been up only for a year and a half now. We have the ETH BTC ratio, which has been down only for like 2 years. Sol ETH, which is painting new highs, and then Sol USD, just because Solana has kind of been one of the meta focuses of this particular cycle. I think this is hopefully just like kind of an opportunity just to look at these charts and get your interpretation as to like what the vibe is from a man who knows how to navigate charts. So maybe I know you always have pretty deep analytical takes because you are both following the crypto industry while also looking at the charts. When I present to you these 4 charts that are all like right next to each other on the screen here, what's the first kind of thought that comes to mind? What's the first thing you think about?
Yeah, I mean, I think first off, it's not too surprising that Bitcoin dominance has done well. I feel like a lot of, well, let's back up the narrative just a tad. Like, I think a lot of people are wondering, is this cycle over and that kind of stuff? And I actually think that the cycle, if you will, has probably hardly begun. Not to get overly bullish, just to say like what we've done so far feels more like the experimental stage and the in-between stage of what's probably a longer market cycle than we're historically accustomed to, where I think you'll look back at the ETF launches and some of the the changes in the ecosystem as more of the beginning of a cycle, or like a early cycle pause that feels, if you're trying to give a corollary, that's more like 2019-ish than anything else. Whereas there's a lot of people that they might have gotten rich and then poor again or whatever on meme coins or something. Like that feels like a smaller meta to me within a broader crypto macro cycle. Like what people think of when they think of, Bitcoin making new highs or stuff happening. I don't know if you see this, David, but I see this where like most people aren't really asking me about crypto at all in my real life. Like
Certainly.
they're not excited about buying crypto. They're not like, or even stocks in general, even though you've seen some amazing runs on like Nvidia and other things. I feel like overall, I would say relative to inflation in particular, like the real values of the stock market has really just been chugging along more so than, in some kind of state of euphoria or anything like that. And I think, Bitcoin's really been, or crypto's really been pretty modest as a whole. And it's been more of a zero-sum game within crypto markets. And so some things have won and some things have lost, and a lot of things have round-tripped. And what you're showing on the screen right now is more of what are the assets that have kind of showed up as dominant assets. And one of the biggest things that I think you're presenting here with Solana is, like Ethereum did in the last market cycle starting in 2020, Solana is essentially entering the big boy table, where I think we can safely define Solana as a major, not purely by market cap or like total market cap, but like
Mind share.
Mind share, development activity, people that care about it, like people that care about it no matter what the price is. It's not like it's survived a thing. It survived a hardship, like with the FTX failure and going, from a price perspective, going from 250 plus down to $8, and then has recovered, and forget whether it's in price exploration or something. It's just that it didn't really impact the fact that people cared about it and kept building on it. And I think that makes that's just as important as market cap in terms of it becoming a major. And so I think you create this network effect, this perpetual motion type of thing, where it is in a new arena, and it's not a cathedral, like it's more of a bazaar. Whereas a lot of these like defined L1s or L2 ecosystems are still like, well, hopefully if we build it, people will come. And you don't necessarily have like massive amounts of evidence of those doing so. And so I think like Sol ETH in particular, or even if you looked at Sol relative to anything, I think it's fairly well outperformed as its arrival, if you will. And then but within that, that's the inner meta of Sol becoming a major. Sol's not at all-time highs. You know what I mean? Like ETH is not at all, I mean, ETH is not at all-time high. ETH is underperformed, probably because we're not necessarily pulling in so many brand new people that because Sol has gained, ETH is actually it may have gained, but just not as quickly as Sol, so it's lost on a relative basis. And Bitcoin has entered its own teenage years as a macro instrument to the legacy market, like, and that's thanks to the ETFs. And so, but a lot of this is still cyclical to me. I personally am like really bullish on all three of these assets, and so therefore seeing these swings in relative values is more fun than it is anything else, because if they were static, then there's no trade to be made. But when they're not static, it gives you an opportunity to identify value. And so that's kind of the framing that I would use for these before we dig into like the specifics of what do I think is going to happen next or whatever.
Let me throw some vibes at you that I think that you'll agree with. And so double check me if I'm wrong. Bitcoin dominance has been up for a year. ETH BTC has been down for 2 years. Solana has been on the uptrend for coming up to a year now. And I kind of think that because I definitely have started to move in more towards your side of the argument, of which we actually never have been in a market cycle. We're more in just like this period where crypto people are doing insular crypto things for the last 12 months. And as a result of that, because cycles historically have been defined as many new people come into the industry, retail comes in, there's a new game to play. Last cycle was NFTs. The cycle before was the ICO movement. We haven't had that. We've just had some crypto people doing crypto things inside of the crypto industry. And as a result, there's been some trends that haven't had any reason to change. The growth of Bitcoin dominance being like a very big one. And I also would say like Solana, the rise of Solana is like the actual exception that kind of makes the rule. Whereas Solana had this idiosyncratic moment with the FTX collapse, which like oversold it by a large degree, because it had believers in the Solana ecosystem even before FTX collapsed. And then it also rebounded alongside this like meme coin thing, which is this, again, insular, self-referential crypto activity that a lot of degens do, that also really kind of just went alongside the growth, the rebounding of Solana post FTX. Solana kind of all got re-rated at once with the double whammy of stopped being oversold in December of 2023 with a Jito airdrop, and then you had the addition of just like, well, it's got the current casino that the degens enjoy, which is the meme coins. And that's why while ETH BTC has been down for 2 years, Solana ETH ratio has been only up for 1 year. And that's kind of like the middle of the lull market. That's been like the thing that has defined the last like 12 months or so. But meanwhile, there's no market cycle here. We are kind of just like in this limbo period waiting for new people to come in and actually define what a new cycle might look like. That's kind of a vibe. Do you agree with that?
Yeah, I think it makes sense. And I think Solana, it benefited from, with meme coin mania, if you will. Maybe that was its like yams type moment for, like ETH's DeFi emergence.
Right.
I don't know if it has as direct of a corollary, because I think what Solana is actually doing really well is capturing maybe like this depend market, or this corollary to like quasi real world assets or instrumentation, whereas ETH I think is really further establishing its dominance for like big boy financial markets. And what do those look like for ETH? Like the largest lend and borrow markets in the world can exist on ETH, and like there's things like I'm not shilling bags or anything. It's just like I'm trying to think of some, and I've been out of some of the main day to day. But if you think of like the Heliums of the world, like putting networks, real world networks on chain, and there's a lot of them. I think Solana's done a really good job of capturing some of that. And so I think you'll continue to see that, where like different blockchains start to serve very specific purposes for the sake of speed, or for the sake of durability, or for the sake of reliability. platforms will continue to choose certain assets over others. I mean, I've continued to be really impressed with like how well DeFi works all the time, no matter what you throw at it. Like if you look at a lot of like the Curve liquidation drama was pretty funny. Like I mean, pretty sad, but like also kind of interesting. But how well like even curve oriented markets maintained themselves, much less like the derivative effects. If you look at Aave and other stuff, and Compound got attacked recently, and I guess figured it out. And like there's a good stuff happening on all chains, and I don't know. I'm kind of anti-maximalist, I guess, and especially so right now. But yeah, we're not seeing like the major narratives evolve and like seeing outside stuff come in, and even VC volume is down and things like that. Like despite price being good, these are all signs of this consolidation, early cycle or mid cycle type stuff, not late cycle type stuff. And I think all the late cycle doomers are wrong, basically.
I think the other thing that's kind of worth noting as we zoom out and look at this, the landscape of the charts as a whole, is that Bitcoin has passed the 2021 all-time high only twice. It first passed it when it hit $72,000 in March, and then it did it again where it hit $71,000 in May.
Yeah.
But we haven't been able to sustain, Bitcoin has not been able to sustain the all-time highs beyond that. And so,
Yeah.
and then also ETH, even with the ETF, even though like a lot of the ETF juice is still left to be squeezed, ETH is at sub $3,000. Like it got up to $4,000 within striking distance of its old all-time high, but it actually just never even got any closer than that. And now its all-time high seems very, very far away. And like you said, Solana also just not at its old all-time high. And I'm not contrasting, whatever the opposite of contrast is, alongside with the fact that we don't have any new users coming into crypto. Those things seem to make sense, where we have like the ETFs, but no new users. And so therefore we only have like this being within like striking distance of all-time highs, but no any like net new price discovery.
So I think that there's like a lot of assumptions that people make, like, just because we're going to have yet another 4-year market cycle, because that's how the halving works or whatever. And I think, honestly, the ETFs, for example, might have a bigger impact on demand than the halving itself. And it may be doubly so, but it also might just be on the opposite side of that. Headwinds in the broader global market are better presented in crypto markets because they're in more traditional assets now. Therefore, like election stuff that almost always creates like uncertainty and potential downside or kind of at best consolidation for a few months prior to getting certainty later in the election cycle. I actually think that's impacting crypto right now in a big way, especially because crypto is a policy item in this election in America. And I don't really think the election results will have a huge impact on price. It may have a huge impact on policy, especially down the line, like beyond Bitcoin. I think it could have a big impact on DeFi and crypto policy, depending on who's elected. But I think I'm on a monthly chart right now, seeing like 6 months of consolidation after prior all-time highs. It may feel kind of depressing, but when you look at a monthly chart, like there's nothing wrong with this. Like this is just totally normal. Stop being bored. Like go do something. You know what I mean? Like people will chop themselves up to death rather than just sit on their hands
than do nothing.
And do nothing. Yeah, like they will just freak out all the time. And when you just look at Bitcoin by itself, like we are not outside the world in crypto where you need this chart to be healthy for your other charts to be healthy, by and large. Now you can have this chart in consolidation and somebody's making like 100x's on like a current meta, and that's great because they're just getting wealthier. They're taking money from people that were worse at the game than they are. And then that money will be put into better and smarter hands, theoretically, in that kind of zero-sum environment. But then you're also preparing for what does it look like when broader markets are interested in this asset. And so all this correlates back to my mind, like, macro stuff, like where are rates, where is the dollar, where's all that stuff going on, and all that stuff is honestly good. People don't talk about that a whole lot, but like the Dixie looks like it's got downside potential, which usually correlates really nicely with bull markets in crypto. I have these lines that are essentially associated to where did bull markets begin. And if you look at this, it essentially looks like a mid-cycle. The Dixie is on a devaluing trajectory. And in my mind, I don't even know when I drew this right here, this little like heads and shoulders consolidation thing, because I haven't recorded a podcast in months. But like, not to brag, but it's like I didn't need to record a podcast. I think like I think you could see the Dixie go down at like sub 100 over the next couple of years and get back to that mean in the 90s, and that almost certainly is good for crypto. Whether that vertical delta is the same as these cycles are fairly similar in length, and they aligned pretty well with crypto bull markets. This was December 2013, December 16, March 2020, November 2022, and this is potentially, like, if that continues to go down, I think that's going to be good for crypto. Dollar down, crypto up. Generally in cycles, it's much harder. It's much harder when that's working against you. And so,
just for listeners who don't know what the Dixie is, the Dixie DXY is an index of dollar strength. So when the Dixie goes down, it means like generally assets go up.
Yeah. And so, when you compare that to the Bitcoin chart itself, like that consolidation feels more normal. Like it aligns up actually with a lot of that consolidation in the dollar as well. And so I think the longer we consolidate here, it's not that bad. I do think if the broader economy, if the soft landing fails, which this might be a hot take for people, I think the soft landing is succeeding right now.
I think the burden of proof is on people who don't believe that at this point.
Yeah. Like, yes, are there struggles in the economy? For sure, but like, we're not in like inflation has not run away. We got a 2 handle on inflation for the first time in a long time. I think this last week or something.
That's right. 2.9.
Yeah. And so is inflation still a problem, or prices still a problem? Yes, but they kind of always have been, even when they've been hidden. But it's not 6 or 8, it's not 10. We do face a situation where economies are going to have to decide, do they want to print money or control spending? And they're really bad at controlling spending. So like, we'll see, can they print money? Like, and that's bipartisanship. The only bipartisan thing that anyone believes in is like, well, we still have to do all the things that we want to do, so let's just print more money. And so I think that's going to be the result again. If they can do it without sending inflation right back to 6 and 8%, then I think that'll be really positive for assets, especially like disinflationary assets like Bitcoin and Ethereum. And so I continue to see very strong macro reasons for upside. And then it's a matter of like, how do you play the cycles? What do the cycles mean? And you talked about Ethereum earlier, and I think it's just worth looking at ETH BTC again, like some levels that I've had on here for a long time. And it was really correlated to when Ethereum came out of the bear market in 2018 and 2019. It kind of established these local highs, and it's now using that as support. That is not bullish. Like this is below. I love the 20 and 200 moving averages. Below the 200 moving average, like that's the mean, if you will. And so like ETH is weak relative to Bitcoin for sure. but it's nowhere close to where it was at the lows at like sub 0.018. It's at 0.044.
Right.
Do I think that it could go back to 0.14? Yes, but what's the narrative? Like you need you need real stuff to
Right.
happen in ETH. That's a big
Right.
deal. Like real global financial stuff, difference making applications and protocols that are probably at the scale of like large corporate, governmental,
Mhm.
nation state, even products that are utilizing the Ethereum blockchain to
For reference, a ratio
provide
of
that.
ETH 0.14 to Bitcoin is approaching market cap parity with Bitcoin. You're saying Ledger is saying that in this potential
Yeah, that's
simulation, ETH
yeah,
could get equal to Bitcoin.
yeah. You could probably find some podcasts back when where David was like freaking out, wondering if we were going to have the flippening. It's a word he probably hadn't even heard in a long time.
Yeah, I haven't said that word in a really long time.
Well, you didn't say it still. I did. And that's not what I'm banking on, but like those are the
Right.
highs for ETH BTC. I think what's more likely is can it breach this like 0.075, 0.08 type of territory and get back to like 0.1 of Bitcoin's price, which is not the flippening, but it is a very, very strong asset. I do think that's possible. We are clearly in a multi-year downward trajectory. I'm not trying to polish a turd here. ETH has not been as good of an asset to own as Bitcoin or Solana. On its own, ETH is okay. Although this may depress you a little bit. Like if you look at the 200-week moving average on a weekly basis, which Bitcoin, except for I think the most recent cycle, always used as bear market support because it was just always on such an upward trajectory. Ethereum kind of held it as support, but tested it several times. Ethereum looks like it's basically back in that range. So it kind of looks like it's in this sad state of affairs like it was in 2022 through 2023, recovered really nicely. And this is against USD, but now like that average has moved up. It's very, very weak in terms of like just dollar level strength, which it really shouldn't be in an inflationary environment like we've had. And so you may look at that different ways. You may say like, well, this really sucks. I should just buy something else. Or you may look at this as a relative opportunity for value if you still believe in all the things that Ethereum is good for. I think both are completely reasonable. Like it's hard to fight a trend, and if Bitcoin is strong and Solana is strong, then those might be better assets to own a majority of. I don't think that means that ETH is dead, and I think ETH is still a highly investable asset. I think you need to be on the lookout for what does a bounce look like, what do the narratives look like, and actually the devalue trade that you were talking about earlier that caused not just ripples but like tsunamis across markets and crypto, and a lot of people were like, "Oh, it's over." If you look at ETHUSD, it bounced off that 200-week moving average and actually made a pretty nice weekly wick, which, in my personal opinion, means that there's some strength for ETH, like some native demand well above $2,000. It is definitely not pretty though. Like, we went to 4,800 at the top of the last market cycle. So it has to double from here to get to all-time highs. I do think we'll see ETH all-time highs. I do think the ETFs provide a real positive flow environment. But and it looked pretty good going into the ETF, and then also prior to that yen devaluing meltdown. I think that the Grayscale ETH stuff getting out of the ecosystem is extraordinarily healthy. Like you're kind of shedding off the bad stuff right now, and that's good. So like, you get rid of the ETH problem, and then you have more of a natural, hey, people with ETF access with larger pools of money. People have larger pools of money in their retirement accounts where they have ETF access oftentimes than they do in like liquid, what am I going to put in Coinbase today? It's really hard to convince yourself to go put something either on chain and Coinbase, Gemini, like whatever your exchange of choice is. And people do that in smaller amounts of money than they're willing to roll their retirement accounts with. Like a lot of people our age have six-figure retirement accounts that they would totally buy crypto with from those retirement accounts. I think people are discounting that real buying power that exists, and people will buy those ETFs. And I think that will be very good for both Bitcoin and Ethereum. But you gotta shed your problems, and ETH was a problem. Like
Yeah.
you need people to be able to redeem against that discount that existed and whatnot. So
Yeah.
I think with
That
Bitcoin, we're seeing that happen with Ethereum.
that wick that we experienced in ETH, where it touched the 200-day moving average from the yen
200
carry trade
200 week.
unwind, 200 weeks, excuse me. Like I think a large part of that, the size of the wick was coming from junk capitals, like dumping of ETH from the perceived
Yeah.
like leverage that they had
Which was a
taken.
big deal, by the way. That's a huge
Turns
deal.
out, fun fact, turns out it's actually not junk capital. The label, the addresses are actually mislabeled, but everyone thinks that it's junk capital. But somebody had a lot of leverage that they had to unwind at the bottom. And this also happened with the 3 R's capital liquidation. When everyone found out that they went bankrupt, they were dumping ST ETH into the bottom of the market in a very illiquid market. And you also saw the ETH BTC ratio just like take a huge pummeling back then, and then also kind of bounce back up. Because ETH is this capital asset that's used as collateral for leverage, when there are cascading liquidations in the market, ETH takes like a larger brunt of the force than other assets, simply because it is the collateral. And so that's, I think, why that wick is so big. But also, to go back to like what you were saying with the trend is not ETH's friend at the moment. Right now, the trend is Bitcoin strength and Solana strength. And I think that if you are an ETH bull, you're kind of asking for a phase change in the market, because the current market phase, whatever phase we're in, is not in ETH's favor. So whatever like new retail coming in, new users coming in, new part of the bull market cycle that begins perhaps now, perhaps later, like I think if you're an ETH holder, you're just asking for something to be different, because the trend is not like the trend is going to like run ETH into the 200-week moving average again, probably. Is that a fair take?
Yeah, it could for sure. And yeah, you're looking at when do I want to call the bottom of this trend, or maybe more conservatively, like tack on for the upside as the trend proves that it's reversing. And I don't know when that's going to be on ETH BTC, because I think generally BTC is pretty strong, and I would have no problem owning Bitcoin. And so predicting it relative to Bitcoin, I'm not necessarily prepared to do. I actually think Solana has been softening a good bit. And I think that's heavily correlated to the inevitable unwind of the meme coin stuff. And people troll me all the time, like, and I'm actually trolling them oftentimes when I post like a whiff chart. And I started back when I was like, good luck with that or whatever, and people hated on me. And then every now and then, like pretty much any time it's getting dumped on like a weekly trend, I would tweet something, and I would tweet something, and they'd all get mad at me. And like, I really don't care what happens with whiff, but like, you can't tell me this is strong.
That is a brutal chart.
Yeah. So when I first did it, it was in this consolidation, and then it pumped. And so people are like trying to counter trade me or whatever whenever I tweet stuff like that. This is not strong. And I think like this is representative of the meme coin market. In an environment where you have a lot of real world value for these majors that we've been talking about, I just have no desire to be like, oh yeah, I can get a 10x on this too after somebody else got 100x already, and they're distributing into this chart right now. What you see on this chart is people distributing their wins, or capitulating on their losses because they thought they were early, but then realized they weren't early. And so like WIF people or whatever, and WIF has held up way better than other meme coins. Like tons of meme coins are down 95% plus already. They don't want to tell you that 80% of their portfolio is in other crap and 20% of their portfolio is in WIF. And, they're giving me a hard time because like if I make a tweet about WIF when it's here and I say how bad it looks, and they're like, thank God Ledger called the bottom again and I can be happy. And then they start messaging me saying how dumb I am. And guess what? It's every time they do it, it's like up here. And then it's always the top. So like, just counter trade everybody is the point. Like, just look at my tweets when I do that, buy WIF, and then when people start saying like, haha, I told you so, then dump it. That's how to play the dual counter trade. Be a double agent. But this looks like crap is my point. And
Right.
you know, this was the game on Solana. And so I think some of that weakness, until some of these deep in ideas and other ideas like gain their own native traction, which I think they will. And I think Solana is fantastic. Like, I think the weakness in meme coins will affect Solana itself. And I like Solana a lot. Like, I don't necessarily want that to be true. I just think it will. And I think that you see it right here. Like, this is consolidation, sure, but I see weakness. Like, this is the 200-day moving average. It's dropping below that. It just doesn't look very good to me. The 20-week moving average, it's dipped below. It is in a consolidating range, but like if Sol went back to like sub 100, it wouldn't surprise me at all. And a lot of people would probably get pissed off about me saying that, and they can troll me in the comments down here below. And so I just think that that's not an unlikely scenario. I'm not saying I want it to happen. I'm not guaranteeing that it will happen. I will say, like, in this range here, it needs to like abide by that wick that it had during that meltdown that we had. Because what I would like to see for Solana strength would be kind of bouncing off this, continuing to consolidate, and creating this like really exciting type of consolidation that's more at the highs, not at the lows of the range, so that you could have, you know, a breakout opportunity that would take it to all-time highs. I just think that might take till like after the election, end of year. That tends to be a good time for like strong upside, is end of year, post election, and then have a really strong 2025. Like, price discovery in 2025 across crypto assets would make sense to me. Trying to predict like where is that going to begin, it wouldn't surprise me at all. It's August, September, October, November. You know, you got 90. Is it under 100 days now to the election? Right around.
Yeah, it's about around then. Yeah.
Yeah, it wouldn't surprise me at all if 60 to 80 of those days include more chop on a relative basis, where Solana underperforms Bitcoin and Bitcoin itself chops as well. It wouldn't surprise me at all. And it just happens. It happens every 4 years, and people act surprised about it, about an election. And if we add to our kind of potential for weakness argument, Sol ETH has had these kind of 4 drives. Now, it's still strong here, no doubt about it. It just wouldn't surprise me if it like went back towards the bottom of the range. And so, and Sol BTC kind of similar, just in the middle of a range. Also 200-day moving average here. Like, those are just the things I would be looking for if I was doing more like swing type trading and trying to, in short-term capital gains positioning, trying to figure out, would I rather own Solana, Ethereum, or Bitcoin right now? Personally, Solana is not, it's not first on my list. I think it's probably third on my list. That's also how it is in my own portfolio, I guess. I didn't think about it that way, but I just think there might be a little bit of relative weakness that can be disproven by relative price discovery. Like, break out of this range against Bitcoin, you know, I'd have no problem on Solana, like, buying something like that, but let it prove it. You know, like, you don't have to be a genius, you know, like, why bother with the consolidation? And so I think it's kind of a boring time, like, to be honest, in terms of crypto stuff. That's not a bad thing. And I think you're looking for kind of relative trades. Like, we need to see considerably more strength in Ethereum. We need to see more strength in Solana. I think Bitcoin looks the best of all of them right now, but it too is under its 200-day moving average. And is just in this choppy range that I think we can expect to continue to some degree. And if you're not prepared for that potential outcome, like what if Bitcoin goes to 40K? Well, that's definitely your scenario for Solana under 100, ETH under 2K. And I'm not trying to be a bear, but that would wash out a lot of leverage. It would wash out a lot of like speculation that occurred in meme coins. All those things would get completely destroyed. I don't think it would be that bearish for the majors in the sense of I think those would be good relative values to buy at. And so how do you want to position yourself between now and the end of the year in a place to where you can take advantage of those opportunities? Because I think there's going to be some really great ones.
I think the pattern that a lot of people are seeing is that relative weakness that you're seeing in Solana, the clear weakness and the trend of weakness that we were seeing in Ethereum, and then the lack of breakout that we're seeing in Bitcoin. And especially in that Bitcoin chart, that monthly Bitcoin chart, where like if Bitcoin is consolidating below all-time highs, like consolidating below all-time highs is like kind of sick for like a little bit, but it's been a really long time. And I think in the crypto markets, with the very impatient crypto traders, crypto investors that we have because of these 4-year cycles, if it's not going up, then that's a risk. Like consolidation looks like, it's like, well, if it's not going up, it's going to go down. And if it doesn't go up soon enough, then like I think the fear is that people get impatient and they start to assume like, oh, the cycle's over, it's time to sell and get out.
Well, it's especially depressing when you're underperforming the stock market.
Oh yeah, for sure.
Which is occurring.
Yeah,
by a lot. Like, look at the wick that stocks created relative to what Bitcoin created. And what's crazy is it's not just the stock market. Like, if we go to gold, for example, like on a chart, now percentage wise, I don't know how severe it is, but like on a chart, gold looks freaking great. Like gold broke out
gold is in price
discovery. It's in price discovery, and I'm sorry if that hurts your feeling. It's just true. You know, like it had a 4-year consolidation, and now has been doing very nicely for 6 months straight. I think that's a good thing for Bitcoin to just rip it to pieces once it actually goes, but it's lagging like crazy right now. And yeah. One other element, you talk about rates and whatnot. I think seeing consolidation in rates as well, which was absolutely a headwind on crypto. Like, I think that if the 10-year goes back down to the mean, which is about half a percentage below where we are now, that would be really good for crypto. So if you can do all that without actually going into a full-on recession and do it as the soft landing, everybody in crypto should be rooting for a soft landing, because when you're the laggard in the room, if the economy as a whole turns and you never pumped, like, you're just the sad one that underperforms on the downside. So like, you need to be rooting for that soft landing pretty much. And right now I think there's a lot of potential for it. I mean, even the NASDAQ, which has had some weakness, but it looks freaking great. Like, on a relative basis, like, this is much better to own than crypto over the past year or so.
Earlier you said that like we're entering or like the ETFs kind of broke the back of the 4-year cycle. I'm starting to also get behind this idea that like one of the reasons why I think the average crypto speculator, crypto trader, crypto investor like emotionally feels bad is because we were expecting the 4-year cycle and we're not getting it, and so expectations are dashed. But like, we also do have the fundamentals of the ETF flows, which are not like crack cocaine. It is a steady trickle of just like good solid like good dopamine, like a slow. It's slow, right? It's like we're not jumping the gun here. Like it's going to be slow,
but I don't know if you've paid attention to the numbers on this, but all the top 4 or something Bitcoin ETFs are like the top 4 ETFs in a long time. Right. And the next one is Ethereum. Like, Ethereum is behind, I think, the top 4 Bitcoin ETFs or something like that. But it's better than every other ETF that's come out in like the last year at a minimum, and maybe multiple years. I can't remember. So there is demand for those ETFs, and I think that is amazing. Like that's amazing. You're seeing kind of the proof in the pudding, but the S&P, the Nasdaq, they benefit from these just every single month. People DCA straight out of their
401k
paycheck.
DCA.
Yeah, and that's what we're presenting an opportunity for crypto to be part of that basket, and that's a powerful basket. Like if you bet on, especially as people are not boomers investing heavily in their retirements. You know, millennials are about to have their peak earning years, and millennials are very open to crypto. Like, don't forget these things, and don't live on these like day-to-day timelines. Like, for once in your life, think on a 10-year spectrum and what that means. Like, I absolutely believe somebody that's putting $100,000 in a market now is going to have seven figures by the time they retire if they're in their 20s, 30s, and 40s. And I think that is an amazing opportunity. Don't get distracted and burn out on things, and identify the fact that you have a 10x plus opportunity sitting in front of you. And I think that's what we have in crypto markets. It's even with majors, like not even talking about all the stuff down the line. And I think that I think that Ethereum in the 2000s is cheap. I think Solana in the 100s is cheap, and I think Bitcoin under 100K is cheap. Like, I'm sorry, that's just how I feel. And so I think $250,000 to $500,000 Bitcoin makes complete sense, and I think that $10,000 Ethereum makes complete sense, and I think that $500 Solana makes complete sense, and I don't think those are that aggressive as targets.
Yeah, as Chris Beniski and many others say, don't fuck it up. And I think people very frequently fuck it up because they think that these numbers are coming like in 4 months or 3 months, too short amount of time.
You and I have been here for a decent amount of time, and one of the reasons that we're still here is that like we generally try to keep a level head, keeping your leverage down. Like, stop using leverage. Like you really suck at it. Like 99.9% of you absolutely suck with leverage. I would much rather see people go into crypto with conviction, if you will. Like, I would much rather, with spot in majors, see somebody put 80% of their net worth in crypto than to put 10% of their net worth in crypto, but then go leverage trade it all the time. You will lose your 10% and get disenchanted. But if you put 80% and you're in spot and you averaged in over time during a time like this where you're either in consolidation, a bear market, whatever, like, I feel very confident in somebody feeling good about that decision over the course of years. I feel very negative about somebody that thinks they're going to turn $1,000 into $10 million using leverage and buying the coin of the day. And almost everybody that in my life like says they want to get in crypto, they struggle to not do that. They just can't help themselves, and they want to make stuff that's happening fast but feels slow. They want it to happen faster. They want it to happen now. When it's happening fast, but you've been going slow, you'll know and you'll be able to react. Like, when 2020 DeFi happened, when 2021 NFTs and all melt up on all the things happened, it happened fast, and we all knew. Oh my gosh, the train is going and it's time to bet more. Like, you just know, but it's because we were already there for years and you felt the difference in real time.
I do remember that moment where ETH broke out from like being, it broke out higher than $330, which it hadn't for like 2 years, and it hit $425 or something like this. And I had never seen a time on crypto Twitter, in all my chat groups, all my Discord channels, all my Telegram servers, everyone was like, oh yeah, it's on. And we were all right. Like, it was consensus and we were right. And the next thing that happened was ETH went from like $400 up to $1,100 over the next like 6 weeks. Same thing with Bitcoin.
I think it was here.
Yeah, right there. Like, we all knew it. Everyone knew it. And I have never felt like that ever again since that moment.
Yeah. Well, and what's funny is, if I remember correctly, like DeFi summer mostly happened right here when ETH was pretty sideways. ETH marked up and it killed DeFi summer for a hot second. And then it consolidated again. There was a continuation, I think, of some, or actually Bitcoin ran like crazy while ETH went sideways right here. And then you hit kind of the end of the year, new year. And by the way, look at this. This is an election year. And a lot of that uncertainty goes away, and it just went bam, you know, just like absolutely nuts. And when you feel these breakouts happen, this is on a weekly chart, but on a daily chart, if you look at charts all the time, which most of the people watching this probably do, you open your phone, you don't have to look at the chart, you just see the price, you feel it happening. And it's like, we're down today, but then, oh, look how fast that recovery was. Or we're up today and it's kind of relentless, or it's a steady eddy. And you just kind of feel this bubbling up, like it's just gradually bubbling up. And there's this strength that you just feel in the market because you look at it every single day. And then when that lid blows, you're just not surprised. You're not surprised at all. And it's time in the market to let you know what that feeling is like. I do not feel that in the market right now, personally. Like I feel a willingness to be patient, but I don't feel like the lid's about to blow. I feel, if anything, like just expecting more of the same over these next couple months. Would I like to start feeling that water to boil a little bit prior to maybe some election-centric resolution for the market? Yeah, I'd love that. But if we just nuke between now and the election, it wouldn't surprise me, because that's the opposite, right? Like that's the water like emptying out, and you kind of feel it. You can like feel the liquidity in the market leaving. You can feel pain or tremors that exist from a macro perspective, or things like the fake jump blow up, like whatever that was. Like that's one of those types of tremors that's the opposite of what we were talking about. So if you're patient, and if you spend time in the market, if you pay attention, if you don't lose everything doing dumb stuff, then you will be there in time to feel when it's real. And that's when you start making aggressive moves. That's when David and I are texting each other about random like projects that we think are interesting, and like 2 weeks later they've doubled in price. And some people, maybe you felt that on in meme coins or some of these smaller metas, but like those were small metas. Those are not big level metas, in my opinion.
Yeah, I think that's right. Wise words from Ledger, who is a wise man. Ledger, thank you for coming on the show and walking through some of these charts. I couldn't have done it without you, my man.
Yeah, I appreciate you having me. I like my podcasting sea legs are not there right now.
Yeah, we gotta keep you sharp for when you eventually return. Will you ever return? Will Ledger Cast come back? Will Up Only come back?
I don't know. I don't know in what formats, but yeah, I'll be around. I mean, it would be equal to all these mistakes I'm talking about for what we'll say like people have been in the market for only a couple years or whatever. Equally stupid would be to have been here for what's it been, David, like 7-8 years. Yeah. And then just be like, oh, now that this is a major asset, I'll just leave. I just want to go. I just want to go a little slower. Like I want to make more measured moves. I have that has been the sentiment of the cohort that I've been in. Like I've been feeling it. Ryan's been feeling it. I know Anthony Cesano is just like, yo, like you can't keep on just like slamming your head into your screen for like 6 years in a row. You need to have like a hobby or something. Yeah. You need to have like, touch grass and be real. I moved fast for a long time. Like I like to trade. Like I told you beforehand, like I need, in fact, if I'm going to like cash out, I need to be pretty illiquid because I just want to buy stuff. Like I want to trade if I'm liquid, if I'm overly liquid. And like this last year this is pretty embarrassing. It was like one of the only times in my entire crypto life that I had long-term capital gains. It's like, have I really never done this before? But it's because I am best in kind of a swing trade type of format. Like longer than a week, oftentimes longer than 30 days, but probably less than 90 days or 180 days. Not going like completely degenerate or anything, but swinging between things are like major ideas that I have. And so, you know, there were a couple of times where I had long-term capital gains, but like when the market's really hot, I'm probably not. Like I'm gonna be bouncing around a little bit, outside of minor portions of my portfolio. But like I hardly traded at all between mid 2023 and mid 2024, like hardly at all. And I kind of made some choices, and those choices were fine. And I had long-term capital gains for really the first time in quite a while. And so,
hey, congratulations
like,
on the long-term cap gains,
thanks.
brother.
Yeah, thanks. Other than like angel investments and stuff, those tend to those are always long-term. But those like for liquid crypto, to have long-term capital gains, it has not happened to me a whole lot. And so I need to do that more.
Well, it makes sense because the traders have their moment during bull markets when there's high volatility. And if anyone has experienced a bull market in crypto, time compresses in bull markets. Like 1 week in a bear market is not the same as 1 week in a bull market. In a week in a bull market, like 17 things can happen. And in a bear market, you know, only a few things happen.
Yeah. And if you look at kind of where charts are, like it wasn't a bad decision to not do anything for a year because like we had consolidated into last summer and we had a pretty great year. And so I was pretty happy. And so I actually took some long-term capital gains, and now I'm kind of in a let's see what's next type of mode where I have flexibility to trade. And so, I mean, that's like the flip side of saying go slow, but I want to continue to go slowish, but I'm definitely going to be around, I guess, to answer your question. Sorry to prolong the exit there.
No, not at all. Oh, and also going slower, I think that's what's happening that's what's happening in crypto. Like we're slowing down. The ETFs are slower. The Fed is going to cut rates probably slower. That's kind of my prediction, is like the Fed's not going to whiplash us anymore. They learned their lesson. No. I think everything is kind of going to slow down from like these crack cocaine 4-year cycles, and they're going to smooth out to, you know, some matcha, some more sustainable forms of caffeine, I would say. That's how I'm going to phrase it.
Works for me.
Works for me as well. Ledger, thank you so much for coming on. Bankless Nation, you guys know the deal. Crypto is risky. You could lose what you put in. But nonetheless, we are headed west, and we always will be. This is the frontier. It's not for everyone, but we are glad you're with us on the Bankless journey. Thanks a lot. New projects are coming online to the MANTLE Layer 2 every single week. Why is this happening? Maybe it's because MANTLE has been on the frontier of Layer 2 design architecture since it first started building MANTLE DA, powered by technology from EigenDA. Maybe it's because users are coming onto the MANTLE Layer 2 to capture some of the highest yields available in DeFi, and to automatically receive the points and tokens being accrued by the $3 billion MANTLE treasury in the MANTLE reward station. Maybe it's because the MANTLE team is one of the most helpful teams to build with, giving you grants, liquidity support, and venture partners to help bootstrap your MANTLE application. Maybe it's all of these reasons all put together. So if you're a dev and you want to build on one of the best foundations in crypto, or you're a user looking to claim some ownership on MANTLE's DeFi apps, click the link in the show notes to getting started with MANTLE. The OBOL collective is up and running and is maybe one of the most important collectives that you've never heard of. OBOL is bringing distributed validators, or DVs, to the Ethereum staking stack. Distributed validators allow multiple parties of people running multiple nodes to create a single virtual Ethereum validator together. This makes participating in Ethereum consensus more accessible, more affordable, and more inclusive. It is a strict improvement to the Ethereum staking tech stack. With collaboration from Lido, EtherFi, EigenLayer, and 50 other entities, and thousands of individuals, the OBOL collective is working to scale and decentralize Ethereum using DVs. And now you can get involved. Introducing the OBOL Contributions Program. Visit obol.org/bankless to stake on DVs, either through a partner staking protocol or at home. Earn access to future governance and ownership in OBOL while contributing to retroactive funding for projects that are actively decentralizing Ethereum. This is your opportunity to secure inclusion in one of the most important projects working to scale Ethereum's foundation for future growth. Visit obol.org/bankless to get started. That's obol.org/bankless. ARBITRUM is the leading Ethereum scaling solution that is home to hundreds of decentralized applications. ARBITRUM's technology allows you to interact with Ethereum at scale with low fees and faster transactions. ARBITRUM has the leading DeFi ecosystem, strong infrastructure options, flourishing NFTs and is quickly becoming the Web3 gaming hub. Explore the ecosystem at portal.arbitrum.io. Are you looking to permissionlessly launch your own Arbitrum Orbit chain? Arbitrum Orbit allows anyone to utilize Arbitrum's secure scaling technology to build your own Orbit chain, giving you access to interoperable, customizable permissions with dedicated throughput. Whether you're a developer, an enterprise, or a user, Arbitrum Orbit lets you take your project to new heights. All of these technologies leverage the security and decentralization of Ethereum. Experience Web3 development the way it was always meant to be: secure, fast, cheap, and friction-free. Visit arbitrum.io and get your journey started in one of the largest Ethereum communities.